But I say to young people like you, there's 6 basic words to financial literacy and financial education. And the 6 words again are income, expense, asset, liability. So these are the 4 words: income, expense, asset, liability. And the last 2 words are the words cash flow. And that's why the game is called cash flow. And the secret to being rich is not a college education, but can you control cash flow? And this is what cash flowing looks like. So this here, you need this, income, expense, asset, liability. Again, this is, you get a job. And this was my poor dad: go to school, get a job, get your PhD. And so this here is cash flow. So the income comes in and it goes out this way. First line of expense is tax. So this is a poor person's cash flow pattern. It's not how much money you make. So that's a poor person. This is a middle class person's cash flow pattern. And this is where the house comes in. First thing, most kids do when they get the pay raise or that, they buy themselves a bigger house. Oh, my house is an asset. Now, who tells you that? Your real estate agent, of course.
Yeah.
Right? Because they want to give you this false sense of security while you're getting screwed.
Exactly.
But when you look at what happens with a house, a personal residence, something I live in, the money comes in and goes out, and this is middle class, but it also goes out through a mortgage. So that's why your house is not an asset. It's because it's taking money from your pocket. So very simply said, assets put money in my pocket, liabilities take money from my pocket. Is a house that I've got. And I started when I was 25, bought my first house, and it was an apartment. It was an investment property. I didn't live in it. I rented it out, and it put money in my pocket. It's cash flow. Where is the cash flowing? So as a young person, and to all millennials, or if you're old, financial intelligence is the ability to control cash flow. You'll pay, most of your money will go out through taxes in your lifetime. And then they tell you to buy a house and a car. A car is an asset. No, a car is a liability. You got insurance, gas, upkeep, and all this. Now, if you buy a taxi car, it could be an asset. It's cash flow. So I started with this. Cost me $18,000. I paid for the credit card, and I put $25 in my pocket. Okay? It's an infinite return because the cash flow paid for the mortgage, it paid the expenses, pays the operating costs, and I still made $25. Mm-hmm. If you have a job, you pay tax, but income, the rich get richer because when you have asset income, taxes are less. You can get it down to 0 if you want, but that's financial intelligence. But can you control cash flow? Many people don't realize, but their brothers or sisters' kids and all this become liabilities to them. So as a person who's fairly well off, I'm and Kim and my friends are thinking about 2-legged liabilities. So I know today that if my sisters become ill, I'm the one with the money, and it's my responsibility to pay for them. This is the basic of financial intelligence, financial literacy, stuff like this. Another thing about people is you have a bad advisor, like a bad financial planner or a crook, or a business partner that's a crook, a wife that's a crook and all that. There could be human liabilities. I have 2 friends right now who just joined a $1 million club. And they married beautiful women, got divorced, and the woman is now costing $1 million a year in alimony. So their beautiful wife and the child support, it's $1 million going. And she's only 40 years old, so she has a whole pile of boyfriends, but it's costing him $1 million a year for her boyfriends. I said, I want to be her boyfriend. And the problem is getting worse because the bond markets are not providing income. So many insurance companies have to renege on their promises to provide the cash flow to take care of our loved ones. The same as medical.
Wow.
And so that's why when people say, I'm going to go out on my own and do all these things, they're kind of doing what they love, which is good. But they've really got to think about how many liabilities do they have. It's not just your rent, it's your family. And so for me and for Kim, we have family members, but they're liabilities. So that's why we stay over here. Hopefully nothing will go wrong. But if one of my sisters got ill and she needs $100,000 a month, at least I can provide it.
Yeah.
Otherwise, they go indigent, whatever they call it. Okay.
Yeah.